Right, finish. Right, so the 2019 annual question. So like income statement, capital account and current account. Normally short term payables to partner should be credited to current account. Short term receivable should be debited to current account. Right. Right. Shall we start now? Right. So we can start from my additional information. Right. Additional information, trial balances, then agreement conditions, then complete the answer. Right. First one. During the year, Nadi has taken goods costing 80,000 from business. This has not recorded in books of accounts. Right. Stock drawings. What's the double entry stock drawings? Drawings debit. Right. Drawings debit. Purchases credit. Purchases credit. Right. Therefore, 80. Normally, my drawings debited to which accounts? Drawings debited to which account? Current account. High possibility to occur. But my purchases, no, there's no purchase account. So you have to adjust to cost of sales account. Right, because already calculated the cost of sales, no, therefore deducted from cost of sales. Right here, right, stock drawings, $80 from the cost of sales. You have deducted 80,000. Okay, the two I'll do. Round number 2, good costing 400,000 which were purchased by Ganga during the year using his personal money have been given to the partnership. It was decided to consider the cost of these goods as capital contribution of Ganga to the business, but no entry has been made in this respect. Um, However, all these goods have been sold during the period and recorded in sales account. Right, all goods have been sold. Right. Therefore, how to record this one now? Right, how to record this one? 400 goods lamai purchases. Right, then when purchases lamai, what's the double entry? Purchase debit 400, but lamai when, right? Then here says this purchases by Ganga lamai, right? Ganga purchase for the business 400,000 goods. Okay, so therefore lamai, but it is considered as lamai what here? And normally lamai, normal theoretical part, it should be payable to partner, payable to Ganga. Normally it should be credited to my current account, right? Normally it should be credited to current account, but here my special scenario. Question says it should be considered as what? Capital account, right? Capital investment. Therefore, credited to capital. Should be credited to capital. Okay, but like there's no purchasers account. You have to debit it to cost of sales. Debit means added to the cost of sales value. capital account credit. I think there are this business lamai started this business lamai started right, started. Therefore I think beginning of the question says land, building, office equipment, cash is provided, so keep spaces to record opening investment and write down this one, purchases, keep spaces 400. Okay, right. Third one, lamai, interest on the loan given by Nadi has neither paid or accounted. Right, loan given by Nadi. Right, loan given by Nadi, interest not recorded. Right. So how much the loan balance of Nadi? Tell me third one. Loan balance of Nadi how much? Look at the TV balance. Loan provided by Nadi 9 January 1st 1500. January 1st, huh? Therefore interest rate how much? Interest percentage. Look at the agreement. Agreement lamai given no percentage. Dila dina one agreement. Partners loan interest dila dina. Otherwise we have to refer sections 24. Right? Otherwise we have to refer sections 24. Look at agreement that mention interest. Tinani, it is now 8%. Look at partner side till 8% loan. Therefore, lama you have to calculate interest 8% on 1500. But lama here January ni, you have to calculate January to 31st March. Only 3 months period. 3 months period interest. Therefore, tell me how much the interest rate? Interest how much? 30,000. Right? 30,000 interest. Yeah, 30,000. Therefore, how to record this one? Interest lamai definitely expense ni. Interest expense debit 30,000, interest payable credit 30,000, right? Interest payable credit 30,000. Therefore, my interest payable credited to which account? It should be credited to current account. Current account. Clear? Therefore, my interest expenses record here. Interest of Nadi. Current account credit. There's no opening balances, huh? Because it started 30,000. Clear? Right. Round number 4. Round number 4. Personal income tax of Ganga amounting 65,000 has paid by the business. This has been recorded as operating expense. Therefore, my drawings in personal income taxes means what's the correct double entry? Right? Drawing, debit, cash as credit ni. Right? Correct double entry. Amount how much? 65,000. Right? 65 ni. But what's the issue? They have debited to this should be debited to current account, partnership. But they have debited to operating expense. Operating expenses debit 65, cash credit 65. There's no issue with cash account, right? Debit entry issue. Come on, Harigastan. Right? Harigastan operating expense only nine karan. Me operating expenses minus 65 credit. Debited to which account? Current account. Right, this is the way of recording income tax way. Here debit drawing income tax. Right, Ganga 65. Right, operating expenses deducted me. Keep it, huh? Don't adjust the operating expense, just record it as a minus. Next one, row number 5. Row number 5 the breakup of the insurance premium paid by the business as follows. Insurance for supermarket 300,000, life insurance of Nadi. Nadi's life insurance means what lamai? That is lamai definitely personal transaction, definitely drawings, right? Therefore, look at the TB trial balance army. Trial balance insurance how much? In the trial balance insurance value, TB lama insurance recorded how much? 500,000. But right, that is not definitely incorrect. They have recorded insurance expense debit 500, cash credit 500. This is the way of they have recorded. Total amount recognized as an insurance expense. But what's the correct one? Correct one should be insurance expense should be that supermarket insurance amount 300. Next one Nadi's insurance, that is drawing. Right, that is drawing 200, cash credit 500, cash credit 500. Okay, right. Therefore, drawing should be debited to which accounts? Current account. But what's the error here? Cash account correct, no issues, right? Total insurance how much? 500. Making 500 in deduct 200 and transfer to here. Tell me the correction entry. How to correct now? Correction entry lamai, then you can record a total insurance lamai. From the insurance lamai, you have to deduct a 200. Me insurance expenses credit lamai 200. Right? Understand? But they haven't record current account. It should be debited to which account? Current account. Current account debited 200. Understand? Me current account debited. No issues with cashes. Insurance current account. This is related to Nadi 200 insurance credit 200. Right, okay, right. Next one, row number 6. Sagar was admitted as a partner. He has introduced 1500 capital to the business. It is recorded as separate account. Separate your capital. Cash debit like capital what happened? Cash debit no need record, capital account credit me. 1500. The new profit ratio 3:1, goodwill 600. But keep spaces here to record that opening initial investment. It is given beginning of the question. Let's record later, right? Adjust the goodwill goodwill adjustment. Goodwill adjustment. New ratio debit. Right? All ratio credit. It should be like 1500, right? Please remove one zero. There are I think 6 zeros. Right? There should be only 5 zeros. 1500. Right? What's the new ratio? 3 to 1. Sorry, 532 divided by 10 total. Here all ratio lamai 1500, all ratio 2 is 1. 300, 200, 100. No, no, sorry, goodwill how much? No, goodwill level how much? Goodwill, I look at my previous question, next question, na 2020. This is my two goodwill 600, 600. My previous 2020 question I. That is like 2020 20 location. Goodwill 600 like 321. 321 divide by 3256. 300, 200, 100. Next one, all ratio how much? All ratio, what's the all ratio, tell me? All ratio what thing? Look at the agreement of the business. In the ratio of capital introduced, right? In the ratio of capital introduced. Therefore, look at Nadi and Ganga, right? Land 1500. Look at the question, no? Here 1500. Total amount 3000. Here 1000. Opening initial investment what? 3000, 2000. What's the ratio? 3 is 2. You have to calculate like that, right? At the beginning of the question says Nadi, Ganga provide land, building, office equipment, cash. Those things you have to record here, right? Therefore, ratio 3 is 2. Divide by 5. 360. 240. Sorry. Now I think finished, right? Right. Again, now look at the beginning of the question says Nadi, Ganga provide land, building, office equipment, cash. Those things debit, related account debit capital account should be don't record as opening balances. Me land, these are the actually opening investment, but don't record as brought forward balances. When you start the business, office equipment. Okay, then. Right, that's all. Record the TV items, right, related to the income statement and calculate the profit and provide 3 benefits only for all partners, right? Record it. First item my sales 5000, cost of sales given 1800. Therefore, here after adjust these balances, cost of sales would be 2120. Cost of it 2880. Next one my inventory, that is closing inventory asset. Operating expenses 1200. adjusted value lamai 1000. Property plant and equipment asset depreciations here record 200. Accumulated don't record, loan insurance okay. Salary paid to partners lamai paid salaries current account debit 300 500. Capital accounts, capital account means lamai that are opening balance me, opening initial capitals me, those things already recorded in detail, right? Separately, don't record again, no? Don't record. This is lamai started ni, right? This is started ni. Therefore, right? Therefore, record initial capital. We operating expense should be adjusted me, that are adjustment drawings deducted from operating expenses ni. Therefore, adjusted value should be 1000. Then next one, cash given by Sagar recorded already, cash balance, right? That's all. Sorry, this is now insurance, right? Oh no, this is insurance. Operating expenses 1200. How much the insurance of the TV? Insurance from 500. Therefore, adjusted insurance should be 300. Operating this one 65 minus 1200. How much operating expenses? 1135. Tell me total expenses. 1665. Profit how much? 1215. Now okay, right? Now look at the agreement and divide 3 benefits. Provide 3 benefits. Okay then. Right. What are the agreements conditions? Profit shares lamai according to capital ratio. Each partner is entitled monthly salary in the first 6 months and commencement and later 60,000. 60. Therefore, salaries now should we have to provide only for all partners because Sagar joined end of the period, right? Nadi and Ganga. How much the salary? First 6 months 50 ni, 300. Next 6 months 60, 360, 660, 660. Oh no, for both, right? Sorry, incorrect. For only for 664 each per part, no? Therefore, total how much? Total 1320. Okay. Salary payable. Salary payable to partners. Okay, then my right. I think there's no capital interest, huh? Though there's no capital interest, right? So look at the remaining one. Remaining lamai loss share or profit share. Profit lamai 1215. Benefit salary 320. How much remaining? Profit share or loss share? I taught you this one. 105 minus, right? Minus lamai 105. Therefore, from a remaining loss, it should be lamai, right? Loss share. Loss shares. Loss shares lamai. Right. What we have to do? What's the ratio? Ratio lamai Nadi and Ganga 105, right? 105. What's the all ratio? All ratio then no be only for two partners ne. 3 is 2. Divide by 5. Divided by 5. 63 40. The loss share was double again lamai added to the profit. Added to the profit means profit credited. Right? Profit credit added to the profit. what happened? It should be receivable from partners, right? Receivable from partners, debit, right? Receivable from partners, right? We informed the partners, please provide the loss share again, right? We will collect from them, right? Therefore, this should be debited to which account? Current account. Current account debit, loss shares 63, 42, added to the profit again. Profit will be 0. Okay,